Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, May the 22nd, the year 2018. Let's talk trading. Why you do not get better at trading, part two. Yesterday, in part one, we said that you're not trading enough and you're not trading with consistency. You're not trading consistently. Okay, today, number three. You're going to love this one. The shiny object syndrome. Now, as traders, we've all been there. The hot newest indicator. Right now, almost on a daily basis, I get a message about the slope divergence dashboard. Well, I think I created one of those a decade ago or so. And it's like I'm wondering if some of my code might be floating around, but that's off topic. The point is that don't fall for the latest gizmo, gadget, trinket, indicator, or whatever. And you see, it's really not all your fault. It really, really isn't. It's part of our makeup. There's a book called New, N-E-W, New. And I think I have it in my book reviews because it's actually a book I bought. And my shelves are filled, so I very, very rarely buy a book, only if my library doesn't have it and I can't get it through an interlibrary loan. But I really wanted that book. I got it. I'm glad I did. Because some of us are more prone to fall for the shiny object syndrome than others. It's basically in our DNA. We can't help it. But knowing that we have this tendency to want to buy that new gizmo or gadget or indicator or want a system, you just have to say no. I mean, you've got tools. Every last one of you watching this video, you have some tool. It might be a squiggly line indicator, but if you're on a plating, if you're on a trading platform, you've got more than enough tools at your disposal. You can draw horizontal lines. You can draw trend lines. You can do Fibonacci studies. There's just endless the tools you already have at your disposal. And then somebody comes along with this shiny new object. And like moths to a flame, they sell thousands of them to the traders out there. And then the thing is, you'd think the traders, after they did this once, maybe twice, they'd have a clue. Oh no, they still collect indicators like they're baseball cards. I mean, it's pretty funny. Now, you might go, wait a minute, TRO. You produce indicators every year, so aren't you kind of like being a hypocrite? No, because most of the time I tell you guys you don't need them. I do them because if I see something, if I see a possible way that I can actually put numbers to and say, hey, this is a profitable strategy when you deploy it properly. Yeah, that's why I do it. And the thing is, a lot of them are the same, over and over. It's basically horizontal line, either trading away or trading towards, breaking out or reversing. And it's just one's might be a refinement of the other. Holo and 1, 2, 3 come to mind because a lot of people think they're two separate when there's a huge overlap, because a holo can be a 1, 2, 3 sometimes, and a 1, 2, 3 can be a holo. It's just, you just look at it, there's just slight differences And like I said, one is a subset of the other. And when you get both, well, hey, bingo, right? But the thing is, one, to be aware of the shiny object syndrome. Two, to know it's not all your fault. But you see, there is some gold nuggets in there because every once in a while, you look at all these different shiny objects and you might find what's termed as a knowledge bomb. Something when you get this knowledge, it's like boom, there's an explosion in your brain, and maybe you get that aha moment. Maybe the ton of bricks falls on you, you know? And something just becomes now so obvious, so plain as day, it takes you on a quantum leap to the next level in your trading career, as opposed to just plodding along. You know, when you have those breakthroughs, oh man, it's something else. Like, you know, I guess maybe my most recent breakthrough is with the spread dots. When I saw on that F9, when you hit F9 like this, when I was looking at this and I saw, wait a minute, until this line falls below this level, price isn't dropping, and vice versa. Until this price gets above this level, it's not rising. And see, we might even see it right here happen. You see, okay, we're right about there. But see, price has to break this for it to continue up. And so that really helped time my entries so much better than before. It's just so much better. So long as I deploy that, it's almost pinpoint accurate. So, but that's what would be called a knowledge bomb. Okay, so it's like, yes, you know, you've got those shiny objects, and you're gonna probably look at them, and you might even play with them. It's gonna take you away from what you normally do, but every now and then you're gonna get that knowledge bomb, just like reading a book. If I can just get one out of 200 300 pages, if I could just get one thing I can use, it was worth it, because I've got one more thing that I didn't have before I read the book. That's progress, right? But it has to be something real, something tangible, something that I can actually use and apply. Just having something that's shiny and cool, but you don't use it, you don't apply it, what good is it, right? It's like having a shiny car that you never drive. I mean, yeah, you got it, but what good is it? I mean, how many things do you have that are really cool that you don't use? I mean, I got a lot, you know, knives, multi-tools. I got more than I can ever use because they were cool, and it just kind of starts stacking up. But that's how they got me, shiny object syndrome. Okay, let's take a look at what's going on. And of course, money and risk management, that's something you need to practice. You need to be consistent. And it's not a shiny object at all. No, this is basics. Okay, looking at the weekly chart here, we still see we've got some that have not filled yet on the weekly gap. We see there's a lot of movement. Some of these off of the weekly open here. Some nice trades. Look at dollar Canadian, 100 pips off the weekly open. Simple trades, just have to take them. And you can see here, we're in the upper weekly wick zone right here. You can see here, the dashboard. I mean, some people could say it's a shiny object, and to some it would be. But if you know how to use it, you can turn it into a tool. And we look down at the daily. You can see here, we entered the upper wick. We fell back down right here at this level, this previous wick right here. Once it fell below there, that was the chance to get on board, even though the candle was still green, but it was falling. You take your chances with trading. You can see this, and from this point to that daily low was worth about 29 pips. Yes, you could say that's hairy hindsight, but nope, that's one of the ways you would pull the trigger right there. Okay, we've got the buy zone. Another simple system, no shiny objects at all. You see, we had a trade trigger here. Maybe you stopped out here. If not, you got it next time here, and there was profit to be had. Granted, it was only a few pips. Here, enter. It came, it was coming back. Scratch the trade, take a few pips. Here, once again, you could enter, and then you could wait it out. Didn't trigger a stop. You could hit the pivot. Yes, the previous pivot right there. See, it hit the daily pivot, it hit the previous day's pivot right there. And I think I said yesterday this was something to hit, so you could rewatch yesterday's video. And I think I predicted that, yeah, we're going to, we'll take out that pivot. So there you got it. Let's see. And then you had a chance here, and that was probably a scratch trade, and that's pretty much it for right now, trading that buy zone. And then the euro got hammered. You can see here it hit that 1800 level. Well, it's just right about there. So you took the buy here. Now, just trading the double O's, you would have taken the short here, and there was profit to be made. And those are trades that we know about in advance, those double O trades. And I think we were also looking at the, well, that I guess happened way back here when it was at the 1, somewhere over in there, at the par level. Right about there, you can see double touch and down. No rat zone, 38 pip range, not a trade. And once again, the pivot, it hit that pivot, came back down, touched previous day's pivot, so cleared. Price action. 2 ball, red at the line, 3 ball, green at the line, H1 candles at the line, simple stuff. H1 candles at the line, right there. Probably scratch or stop out. Right here, probably a scratch. Some profit to be had. Profit to be had. Definite profit to be had here. If you entered here, that was like pretty much a scratch or a stop. Right here, pretty much a scratch or a stop. No, actually there was profit to be had because there's the high right there. So there was profit to be had. Definitely. So wick zone, price doesn't like staying in the wick zone. Even though there's not much distance, you can still trade it. It's still tradable there. Holo, highest open, lowest open. Price moves out of the holo zones. And you can see here what happened. Price came down through. Price came back up. So you can see pretty choppy there. And let's see. We've got some IRB lines here. There was a short put in a couple of times, taking the short, small profit, and now we have a long trigger and a short trigger here. So look for price to move out of that range. So that's it. Remember, don't get caught with the shiny objects, okay? Because it's not what you trade, it's how you trade it. TheRumpledOne off to drain the banks. Come join me, draining the banks.